The tax consequence of a capital gain is often something that people forget about. Now, the reason for this is when a person invests in a capital asset, be it shares, be it a property, they normally invest for the long term. This is why it's a capital asset, and they retain this asset for a number of years. Now, unfortunately, when the time comes for them to sell this asset, they realize that there's a capital gain and there's a tax consequence associated with this capital gain. Now, how do we prevent a potential risk of us paying more tax on this capital gain than we really should? And the answer to this is proper record keeping. I cannot emphasize this enough. When a person calculates a capital gain and the tax consequences associated with this capital gain, you have to determine what the base cost of the specific asset is. So when it comes to a property, for example, the base cost may be something such as the purchase price. Now, when it comes to a share, purchase price, but there's more to it. There's certain things that are called allowable expenditures. And in terms of the Act, these allowable expenditures are permitted and they get added to the base cost in order to decrease that capital gain between what the base cost is and what the proceeds are, which is typically the amount that you sell the asset for. So your goal as a taxpayer is to make sure that that gap is as small as possible. But the only way to do this is to have proper record keeping and have those allowable expenditures at hand when the time comes. So what are these allowable expenditures? Well, you'll often find that these are associated with the cost of acquisition. And yes, there's a bunch of rules and exceptions to these, but start wrapping your head around what the cost of an acquisition is. So when it comes to property, for example, things like the transfer costs must be borne in mind. If you're a purchaser that buys a property at an auction, for example, that commission that you're paying up front, that is an allowable expenditure. And also the costs of selling the asset. So what costs are you paying at the moment in order to acquire the proceeds? What are those costs? Have you kept proper records of those? And can we add it to the calculation in order to decrease that capital gain? And by virtue of that, decrease the tax that you will be paying.